Matt, Orton is now joining in to comment on the Bank of Japan's decision to hike interest rates and the commentary. Matt, 25 basis points done and dusted on expected lines, but how would you classify the commentary? And what does it signal to you about future hikes from the BoJ?
So I think we're going to have to wait until the afternoon to get some clarity from Ueda with respect to when the next hike is going to be. The statement didn't really give or offer any pertinent information regarding where that is. I think, it says accommodative conditions are likely to keep supporting the economy. So I think the rate cut was largely expected by the market. Obviously, the market is still continuing to move higher, which is encouraging. But I think the main message is that, I don't think we can expect a constant hiking cycle. It's going to be similar to the U.S., where it's really going to depend on where the data continues to go. So I do think they managed to kind of thread a needle so far. But again, I think the market really, once we hear Ueda speak in the afternoon.
So as of now, it's hard for you to say whether the commentary that we've heard is dovish or hawkish. Is that correct? You'll still wait?
I would still wait because, again, the increase, the hike was largely priced in after this month. Ueda really gave hints that they were going to hike rates. It's still significant. I mean, it's the first rate hike since January. The rate is now at the highest in 3 decades. But I think it's just a reflection of the bank's confidence that it can achieve its inflation target and confidence in the overall economy. So I think that message is certainly resonating with the equity market right now.
Matt, just one question, because the fear is this unwinding of the yen carry trade. What are the monies involved now? Do we have a size of the yen carry trade? And what does this 25 basis points rate hike mean for an unwind?
So I don't think that's very likely, given that at least so far there haven't been any surprises to the market. If there had been a surprise 50 basis point cut or language was incredibly hawkish, I think that could have been a challenge overall. But I don't think it's likely you're going to see significant enough imbalances where you get an unwind in the yen carry trade. If anything, given the overall resilience in the economy, given where interest rates are in Japan, I would probably be biased to think that we're going to see some yen strengthening in 2026 once we get past all of this news.
So, Matt, this, precipitous fall in the yen doesn't seem to worry you. Basically, from a global equity standpoint and fund flow standpoint, where does this leave us? This 30-year high interest rates in Japan and the yen weakening to 156 this morning.
Yeah, well, I think it's certainly supportive of Japanese financials, and I think, again, the signal that the economic outlook in Japan is positive. I think that's a message that's good for equity investors. Obviously, you have very strong earnings revisions in Japan as well, which is a positive for equity investors. The flip side, like you brought up, Surabhi, is the currency moves, right? This is the same story of India, where you've seen foreign investors selling because of persistent weakness in the overall currency. I think in the case of the yen, just given how significant the moves are, I think a lot of investors are biased to say, we can hold out here just given the weight of Japan across global indices as well. You can't afford to be significantly underweight. The largest, country weight within the developed country indices with strong equity gains. So I think that provides a little bit of a ballast to see significant foreign investor selling. And there's also the ability to hedge the yen because it is a very liquid instrument. So there are ways that investors can protect the gains that they get in the overall equity market.
Okay. All right, Matt. Thank you so much for joining us at short notice. This was really helpful, the context on this 25 basis points increase in interest rates that the BoJ has delivered.